But if you invest that $100 every single month, starting today, the number it turns into will genuinely shock you. And I'm going to show you exactly where to put it, step by step, even if you've never invested a single dollar in your life. Let's run the real numbers. Let's say you're 25 years old. You invest $100 every month into a simple index fund that tracks the stock market. Historically, the S&P 500 has returned an average of about 10% per year over the long term. Let's be conservative and use 8%. At 8% annual return, your $100 a month becomes around $35,000 after 15 years. After 25 years, over $95,000. And by the time you're 65, over $350,000. From $100 a month. Here's the part that gets people. You only personally contributed $48,000 of that $350,000. The rest, over $300,000, is pure compound growth. Your money made money, and then that money made more money. That's the game. So where do you actually put the money? Not a savings account. Those earn next to nothing. Not crypto. Too volatile for consistent long-term investing as a beginner. Not individual stocks. Too risky when you're starting out. The answer for almost every beginner is a tax-advantaged account first. If your employer offers a 401k with a match, put your $100 there first. That match is an instant 50% to 100% return on your money before the market does anything. No employer match? Open a Roth IRA. You can open one in about 10 minutes on Fidelity or Vanguard, both free. A Roth IRA lets your money grow completely tax-free, which over 40 years is worth tens of thousands of dollars on its own. Once your account is open, what do you buy? One thing, a total market index fund or an S&P 500 index fund. Something like VOO, VTI, or FXAIX. An index fund is just a basket that holds hundreds or thousands of companies at once. When you buy one share of VOO, you're instantly invested in 500 of the biggest companies in America. Apple, Microsoft, Amazon, Google, all of them, for a single low fee. You don't need to pick stocks. You don't need to time the market. You just buy consistently every month and let the market do its thing over decades. This is exactly what Warren Buffett recommends for everyday investors. And it's what most professional fund managers fail to beat. Here's the mistake that kills most beginner investors. They panic and sell when the market drops. The market will drop. It always does. Sometimes 10%, sometimes 30%, sometimes more. That's normal. That's part of it. The people who lose money in the stock market are the ones who sell during the dip and miss the recovery. The people who build wealth are the ones who keep buying through the dips, because they're getting more shares at a lower price. Your job is not to watch the market. Your job is to set up automatic monthly contributions and forget about it. Check it once a quarter. That's it. Boredom is a feature, not a bug, when it comes to long-term investing. Now here's where it gets really interesting. What if you start at $100 a month and increase it by just $25 every year as your income grows? Year 1, $100 a month. Year 2, $125. Year 3, $150. And so on. By year 10, you'd be investing $350 a month, which probably feels very manageable by then. Run that through the same 8% return over 40 years, and you're looking at well over $1 million. From starting with just $100. The step-up strategy is one of the most powerful and underused tools in personal finance. So here's your action plan from today's video. Step 1. Open a Roth IRA on Fidelity or Vanguard. Free, takes 10 minutes. Step 2. Set up a $100 automatic monthly contribution. Step 3. Buy a total market index fund like VTI or FXAIX. Step 4. Don't touch it. That's it. No stock picking. No market watching. No financial degree required. just consistency and time, which are the two things that are completely free and available to everyone watching this right now. If this helped you, subscribe. Every week I break down exactly how to build wealth from zero in plain language for people who are just getting started. And drop a comment. Are you already investing, or is this your sign to start? I read every single one. See you next week.